How's it going, traders? I hope you're well. I hope you all have had an amazing weekend. Pips of Persia here, coming to you with a weekly market outlook video, preparing you for the trading week of 18th of March 2019 to 22nd of March 2019. Now, again, as usual, before we get started, disclaimers. These setups are purely for educational purposes and by no means require any action. Your capital is at risk, therefore, never risk more than what you are willing to lose, since past profits do not guarantee future results, and trade at your own risk. From the pairs that I'll be analyzing, and there's not like too many pairs that we're going to go through this week, make sure to keep an eye on the ones that you quite like, save the analysis, come back to it in a few days, and see if it's ready for entry. And if your analysis in any way disagrees with mine, please stick to your own analysis. That's the best way for you to learn. Now, without further ado, let's go ahead and get started. Let's start with the economical kind of news for the coming week. We can see that we have quite a few high impact news. Let me go ahead and filter that to just show us the high impact news for next week. There we go. So there is quite a few high impact news for the next week. We do have some high impact pound news on Thursday, and on Wednesday we have a lot of high impact dollar news. So these are the sort of news that I'm going to go ahead and try and keep my trade safe against. I am not a fundamental analyst to go ahead and say I've analyzed the news and I have a certain idea of where it's going to go. I'm just going to go ahead and keep my trade safe against it. Just remember what time the news is. Come back here and read the related stories after. Let's go ahead and jump straight into the dollar index, the weighted index, and start from there. Now, the inverted head and shoulder formation that we discussed last week for US dollar is still in action. You know, in no way this inverted head and shoulder formation has been satisfied yet. So I still do expect a major rise for US dollar coming soon. I can see that potentially with this downtrend over here, we might get another push down to the low of this trend line, as well as our Fibonacci level before the major rise starts. On the 4-hour time frame, I've gone ahead and I've put a counter trend line down as well. You can also wait for a break and retest above this trend line over there, right, above this trend line, to then expect the bullish move for the dollar to start. Now, a few of the pairs that we kind of analyzed last week kind of went the way we want them to, but didn't give us the major move that we were expecting. Australian dollar versus Canadian dollar is one of the main ones, where we were expecting a kind of decline, but it ended up kind of consolidating. Didn't actually end up giving us the major decline that we expected. However, on the 4-hour time frame, we actually closed as a very strong shooting star over there. So I do expect a very smooth decline down for Australian dollar versus Canadian dollar for the coming week. I believe the same applies to the 8-hour as well. Yeah, we've got a great, almost a gravestone doji closure over there. So I do expect a very, very nice decline down to at least a -27 Fibonacci for this week. Not much more needs to be said. It's simply based on trend lines and Fibonacci and candlestick formations. We have 3 confirmations. I quite like this setup myself. Australian dollar versus Swiss franc. This head and shoulder formation that we discussed as well for the past week or so, again, it's still in action. We have gotten a break and retest below the neckline of the head and shoulder being there, right? And the retest of the neckline kind of lined up with another trend line over there and Fibonacci level, okay? If you guys are in this trade, then that's fantastic. Well done. If not, you can wait for a break and retest of this zone on the 4-hour time frame. Let me show it to you. It looks a little bit better. Of this zone over there, this previous reversal zone over there, you can wait for a break and retest of this zone, and then go ahead and take your trades based on that for a very nice intraday trade, intraday/short swing trade for almost 100 pip down to 0.696. I do expect that target to be met very soon. Quite a few confirmations. You've got your head and shoulders, you've got your trend line, the market's clearly trending down, you've got your Fibonacci, so I do expect another nice decline down. Australian dollar versus the New Zealand dollar. This is kind of one of the pairs that We expect it to give us a nice retest and decline. That hasn't happened just yet. However, I am expecting a tap off of exactly 1.03695 for the decline to start. A move like this would be very nice to see. Little rise up to that point and then the decline. However, with this sort of setup where it's purely based on trendline and previous reversal zone, I would have to see candlestick confirmation as well. Otherwise, I would not enter the trade. Very, very simple analysis on the 4-hour time frame for Australian dollar versus the New Zealand dollar. Australian dollar versus the US dollar. We can see that the market was kind of indecisive towards the second half of the week. You know, it tried to come up, went back down again, and was trying to go up. It's a very choppy market, which, to be honest, looks very good to me, because it means that potentially a big move is likely to come, and I do believe that big move will be a bearish move based on the head and shoulder formation, based on a tap off of this, a third touch of this trend line over there, and Fibonacci. Okay, so I'm going to expect a potential rise to our key fib levels, 61.8 to 71%, and a decline from there down to potentially minus 61.8. This would be a very, very, very nice trade to see. Next, Canadian dollar versus the Japanese yen. One of the pairs that I actually quite like for this week. Finally formed the left shoulder, head, right shoulder. Yes, I know I trade a lot of head and shoulder formations. However, in this case, we have actually formed the right shoulder at the same place as the left shoulder, previous reversal zone. Looking very good. On the 4-hour time frame, what I've gone ahead and done is kind of marked trend line / a zone over here, where I'm expecting a clear break below this line, a potential pullback, and the continuation to the downside. I wouldn't really want to go ahead and take any trades on this pair unless I get my break below that line. Now, bear in mind, this head and shoulder formation, you can see it on the daily time frame as well. If I want to go ahead and put the neckline in place, this would be my neckline. So we do have a lot of room for decline. A lot of room. I'm not looking to catch this entire move down. I believe this can take a few weeks. However, if we can take quick trades in between, that would be amazing. Quick 50 to 100 pip, another 50 to 100 pip, another 50 to 100 pip. So this is another setup that you should definitely keep an eye on. Swiss franc versus the Japanese yen. Finally got our rise to the trend line, to the Fibonacci, as explained in the previous video. The decline hasn't started yet, which is quite good because it means we can actually catch it this week. Daily time frame, we haven't gotten any kind of significant closures for them to kind of indicate a decline. However, the weekly bearish engulfing, not for previous week, but the week before that, that's still in action. That still is not satisfied. I expect another bearish move. Okay, we have another touch of that trend line. We have a touch of, this is my trend line, by the way. We have a touch of the key fib level as well. So do expect this to give us, I would say, down to at least minus 27, so over 200 pips. I really do expect this move to happen. Looks very, very good to me. Minus 27 is lining up with some previous reversal zones as well. If it doesn't reach the minus 27, you can take some partial profits a little bit earlier around that zone, around the 109.6, let's say, and secure your trades then, and completely, not even partial profits, you can close all of the positions around that price. Euro versus the Canadian dollar. The head and shoulder formation that I was expecting to form last week has indeed been formed. The price 1.512, that was the major price that we were looking at last week, where I really didn't want to see any sort of closures above that, and we actually haven't gotten any sort of closures. I don't count that little closure over there a dominant break of that line, and these are just wicks, so they're not dominant closures at all. Head and shoulder still in action. Almost tapped off the key fib level over there. However, the most important thing is this gravestone doji on the 4-hour time frame. Okay, again, another pair that I almost hope for a nice free fall down to minus 27 to minus 61.8. You know, some of these analysis is the same as last week because, as I said, we were expecting a certain move. For example, in this case, we were expecting a move up and then the decline to start. We got the move up, the decline hasn't come yet. So it means we can catch it this week. Euro versus the New Zealand dollar. Similar story. You have a touch of that trend line. You have a tap off of the key fib level almost. Again, very, very close. Expect a decline. Expect a decline down to this previous low. This will be a kind of a very long-term trade, so you don't need to keep it open for kind of that long. If I want to work with simple structure of the market on the 1 hour time frame, I can go ahead and consider this a left shoulder head, right shoulder for a decline formation as well. In my opinion, you can write this down at least to the 0% Fibonacci for about 130 pips to give us almost this triple bottom formation around there. Okay. Euro versus the US dollar. If I'm not mistaken, we've gotten some divergence on the hourly time frame where the market has indeed created a higher high over there. Our candlesticks have created a higher high over there. And our indicator, our MACD, has created a lower low at the exact same point. So what do I kind of expect to see in this case is a decline, because that divergence, in my opinion, is not satisfied just yet. Still has a lot of room to go down, and that divergence formed at a tap off of the trend line, tap off of the key fib level. So this decline is very, very likely, in my opinion. Okay. On the 4 hour time frame, we can see we've got a very long wick over there as well. I don't really consider that the best of shooting stars, but I can go ahead and consider that a reversal formation. It's quite a few confirmations. You've got divergence on the hourly. On the 4 hour, you've got the tap over the key fib level. You've got tap over the trend line. So I believe this is another pair that can give us minimum 140, 150 pips. New Zealand dollar versus the Canadian dollar. Last week, if you remember, what our main expectation was either a decline from where it touches that trend line, or a clear break and retest for the continuation to the upside. I'm going to consider that a respect of the trend line rather than a break, because we actually did get a nice decline. Then we ended up getting our pullback towards the end of the week. The pullback touched our 61.8 on the 4 hour time frame, gave us multiple wicks over there, shooting star formation over there. Expect a nice decline. Expect a nice decline down to at least the minus 61.8, I would say. At least around that zone. So if I want to go ahead and put a trend line in place as well for where we can potentially take our final profits, it would be somewhere around there. Okay. Just have this kind of setup in place and go from there. I believe we can get a very, very nice over 100 pips out of this pair as well. New Zealand dollar versus the Japanese yen. Another pair that we actually ended up getting some divergence on the 4 hour time frame. So we've got the market creating higher high over there, the indicator creating lower low over here. And this is my MACD, by the way. Again, I've just taken the histograms out. So we have the market creating higher high, indicator creating lower low. Divergence is not satisfied yet, and divergence took place when we reached this previous reversal zone. Okay, expect a nice decline down to the bottom of this trend line. This could be a very, very nice over 100 pips as well. Okay, very simple analysis. Previous reversal zone, divergence. We can consider that a 3-pin formation, but it's not really the best of 3-pin formations. On the daily time frame, however, this candlestick on the daily, I can go ahead and consider that a reversal signal, a shooting star formation. So that looks very good to me. New Zealand dollar versus the Japanese yen for a nice decline. New Zealand dollar versus the US dollar. Same story. Tap over the trend line over there. On an 8 hour time frame, we can see we've got multiple wicks over there. On a daily time frame for Tuesday, Wednesday, Thursday, we actually formed an evening star formation over there. 3-pin formation for a bearish reversal. We've got our pullback. Now awaiting a decline. On a larger scale, we still do have this left shoulder, head, right shoulder general formation as well. Okay. I believe it tapped off our key fib level as well, if I'm not mistaken. Not the best of fib levels, not 61.8 to 71%. But it did reach the 78.6 and it reversed around there, as that was the tap off of that larger scale trend line as well. Anyhow, expect this head and shoulder formation to be completely satisfied, and you can write this down to our minus 61.8 minimum. Definitely something to keep an eye on with all of the candlestick closures we have gotten, with all of the confirmations that we have. We can potentially write this down for over 150 pips, nearly 200 pips, I would say. US dollar versus Canadian dollar. Again, a pair that was discussed in the previous video, and the move down as expected happened. Now we're just expecting a rise for this inverted left shoulder, head, right shoulder to be satisfied. This move down, all it's done is that it's given us a retest of the broken through neckline. Okay, left shoulder, head, right shoulder. This is our neckline. Market broke through. Market came back for the retest. Simple structure of the market is telling me it's likely to go up. And the reason why I have marked that point as my final take profit is measured moves at the head and shoulder. If I take where the head was formed down to the neckline and put it where we got a break and a potential retest of it, around there, okay, we can actually bring the final take profit lower a little bit. We can put it right at the minus 27. So that's where it's likely to line up with the break and retest of it, or where we kind of broke through it. You can see that it lines up perfectly actually with our minus 27. So this is one pair that you can definitely ride up all the way to the minus 27 Fibonacci. Keep an eye on this. US dollar versus Swiss franc. The 8-hour divergence that was discussed in the, was it 8 hour or was it, it was daily divergence if I'm not mistaken, yeah. The daily divergence that was discussed in the previous video is now satisfied in my opinion. So market creating a higher high, indicator creating a lower low, the market declined. That's done, in my opinion. So what I'm expecting for this to happen is for a third touch of this trend line. 1, 2, 3 touches over there. Potential key fib level for a rise up to break our triangle formation over here to the upside. My opinion is a lot more likely for it to break to the upside as well, especially when I look at this daily inverted left shoulder, head, right shoulder formation. So I believe this triangle formation, this massive triangle formation on the daily is going to break to the upside. However, that's not something that I am going to worry myself about as a short swing trader or an intraday trader. I'm only trying to catch this move up, potentially maybe to minus 27. If I keep a position open for a longer period of time. US dollar versus Swiss franc is not really the fastest moving pair, so it could take some time. Finally, gold. This gold analysis was also sent on my Telegram as well. Definitely something I'm going to be keeping an eye on for the coming week. The reason why I'm saying that is because we have gotten this previous kind of reversal area. You see all of these wicks, all of these reversals over there. And the market came back and respected it over there again. Okay. Now, at the same point that it respected that, it was a tap off of our key fib level. It was a break and retest of this trend line drawn over there as well. This trend line right over here. And on the 4-hour time frame, we've got a multiple long wicks, and this candle, more than anything else, is a very clear indication of a bearish move to me. A lot of confirmations, looks very, very good to me, as well as a left shoulder, head, right shoulder formation as well. So I really do expect this to decline minimum down to, I would say, 1,288 for gold. That's going to be one of my targets, more or less down to the minus 27. This would be about 130, 140 pips. So another very, very nice setup that you can keep an eye on. Now, this is kind of all of the pairs that I've analyzed for the coming week. As you see, I am not kind of trading pound pairs anymore, in my opinion. Not anymore, as in I'm never going to trade them. But for this week, because of the last week news that we had regarding Brexit, it messed up the pound markets a little bit, in my opinion. So I'm gonna just stay clear of the pound markets. I'm gonna keep an eye on them, and if I do see a nice setup for the pound markets, for the pound pairs, I'll definitely send it on my Telegram. But let's see how the market reacts to these setups, and how the market reacts to the weekend. We can come back to it during the London session, during the New York session on Monday or Tuesday, and see how it goes. Again, as usual, I'll be sending updates for all of these pairs on my Telegram channel. I'll leave the link in the description. Make sure to join it to see if my attitude towards any of these pairs have changed, or if I have, let's say, a new setup and I want to share it there. If you guys have any questions, please do not hesitate to contact me on social media. Again, I'll leave the details in the description. Let me know what you think of these setups. Let me know if you agree. Let me know if you disagree. Leave a comment below, and we can definitely discuss it. Have an amazing week. Stick to your trading plan, and let's catch some pips.